let me tell you about being black on Wall Street. You've got a spotlight on you. So let me tell you about how that spotlight works. He said, hey, if you're a star with the spotlight, you're the brightest star and everybody knows you. And it's going to be awesome. He said, if you're not doing well, if you're struggling with the spotlight and you won't last long. And he said, the thing that's really tough about this is that if you're average, you're going to be average with the spotlight, you don't slip through the cracks.
From Two Comma Media, it's Give 'em the Business, a show about Black entrepreneurs and business leaders sharing their stories of adversity and success. I'm Troy Evans, and on today's show, my guest is Bryan Rand, founder of Rand & Co. Holdings. Bryan Rand cut his teeth in high finance on Wall Street, mastering the art of deals, investments, and capital markets. But deep down, he knew he didn't want to do business as usual. Instead of simply chasing returns, Bryan set his sights on something bigger, supporting entrepreneurs who are deeply rooted in their communities. He wanted to help them navigate the challenges of business ownership, not just with capital, but with real-world expertise and mentorship. While his journey to empowering the underdog entrepreneur would take time, that seed of giving back was likely planted long before he ever stepped foot on Wall Street, instilled in him by his parents who led by example.
I had the benefit of understanding that it was possible to take care of yourself, right? That my father, who, we recently lost him, but was just a superhero. He's just a great guy. Drafted pretty soon after high school, actually spent 4 or 5 years in the Army, left honorable discharge, and went to college on the GI Bill, married my mother, and actually went into a career in corporate America and was working for a company called Amex Coal, and is kind of a staff accountant. I still remember kind of going to, his office building growing up, but they kind of hit a point where it made sense for them to explore doing their own thing. They had actually tried smaller entrepreneurial ventures, pizza shops and those kinds of things. But there became a point where Amex Coal said, hey, you're either going to need to move to Colorado or Kentucky. You're not going to be able to stay here in Indianapolis. And my dad and my mother made the decision to actually stay and to go out on their own. And my mother had actually started a business that my dad jumped into. My mother, who had been a social worker by training, also had an entrepreneurial itch. And so they started what was a business called First Quality Printing, providing commercial printing services across the Indianapolis area. And so I grew up in a stable household. I grew up with love, but never grew up wanting for anything. I always felt like if there was something that I wanted to do, that my parents supported it and that the resources were there. And so it was really the sky was the limit. And I just think it's important just because I had that foundation that sometimes when people think about going out on your own or being an entrepreneur, they can become just paralyzed with risk, right? Their fear of a perceived risk. And I really look at it, and because of that background, I know that it's possible, right? And so when it came time for me to kind of step out on my own, I tried to be prudent about it. I tried to be thoughtful, but I'd had that modeled for me.
And about how old were you when they made that transition from corporate America to entrepreneurship?
Probably about middle school, right? That kind of middle school age. So that's why I remember it pretty thoughtfully.
And does anything stand out about that transition moment? Because I remember my parents were both corporate until I went to college, actually, and my dad got laid off my freshman year at Morehouse. And I remember for him a sense of hesitation and anxiety that soon turned into prosperity. But for at least a year or so, there was a what's going to happen feeling. Do you remember any type of transition moment?
I'll be honest. I don't remember that. But Troy, I think what's important is my parents have always were very prudent. right? And again, like nobody's perfect, right? So I don't want to just say that they did everything perfectly, but I thought they were always like thoughtful stewards of capital. And so, the house that they bought soon after they got married, I grew up in that home. My father earlier this year passed in that home. Like they kept that same house, paid that off, right? There weren't, a lot of extravagances. My parents buy, a couple year old Japanese made cars and drive them for, till they die. And so I say that to say there was never big swings up or down. And so when they were making the pivot to entrepreneurship, I'm sure there was a lot of stress, but because they'd kind of maintained their lifestyle in a certain way, they were able to make that pivot. And like I didn't feel it as acutely as I think I might have if they had really leaned into their best years and, we were Disney World and going crazy in some years and then taking it easy in others. We kind of had a pretty thoughtful, I remember my mom when we would go on vacation, she would save every month. It was that kind of approach to budgeting and finance.
I think that's really important because a lot of people look at the result, right? They'll look at the
Yep.
result of where you are now, but they don't see the process of what it
No.
took to get there. And I remember, I think you may know Adrienne Lance Lucas. She was
Yes.
a former guest on our show, and she talked about the preparation phase of becoming an entrepreneur, right?
Right.
And making sure you are putting the work in before you even make the leap so that you have a successful transition and don't have to worry about those ups and downs as much. So it was good that you got to see that lesson at an
Yeah.
early age.
No, I totally agree with it. And I think the idea is putting yourself in a position to avoid the unnecessary ups and downs, right? I don't think, my personal opinion, I always say I like to share my experiences. I never give advice, Troy, right? But based on my experiences, you can't save enough to ride up the ups and downs, but you can put yourself and your family and your loved ones in a mindset to best navigate the ups and downs, right? You can't ever remove them, but I totally agree being able to position yourself thoughtfully.
Great. And so the bug for entrepreneurship is planted at an early age in your life. And you're growing up in the Midwest. I'm from Cleveland, so I know that area very
Yeah.
well. What leads you to Morehouse?
So what I would say is I think you're totally right about the bug having been planted, but it was one of those things where I think it was planted deeper than I knew. And here's what I say. I think the bug for business success was sort of what we talked about. I was, a young man in high school, and that was really the height of kind of black enterprise. And so I would see whether it was the top 40 blacks on Wall Street or, the the B 100s. And these were superheroes to me. And my dad fed into that, right? That we would talk through business concepts at a level that was more than just casual, really from middle school on. So I kind of started off wanting business success. And so, even in high school, I did the lead program that brought me to Wharton for a summer. I, was a fairly strong student. So I looked at all of the different usual suspects where talented young men can go. And what really brought me to Morehouse was the combinations of things. So, one, in doing that work, I saw that Morehouse was actually a feeder into Wall Street, that for black men, there's just no better vehicle to get there or to prepare you. And that was obvious to me even as a junior and senior in high school. And then, my parents, have been thoughtful stewards of capital, but obviously a private education is a significant expense. And so when I looked at whether I would stay home and try to go to Indiana U or I go to some of the more competitive places, maybe I would go to Wharton, I was actually offered a full academic tuition, room, and board scholarship at Morehouse. And so it just became kind of a no-brainer to say, hey, I want to go pursue a career in business at that time, finance, Wall Street, whatever. I didn't even know the difference, but the ambition was there. Some of the knowledge wasn't. And then combined with the investment that Morehouse made in me, it just made total sense to go there.
You must have had like a 8.0 GPA and wrote a essay that was publishable for the ages because full room and board to
Yeah.
Morehouse is not a joke.
No, look, I was super blessed. I am grateful to this day to Andre Patillo, who was the head of admissions when I got in. And so I will admit, I've always kind of had this personality where I am grateful for my God given talent, but I like to show that with work. Even in, high school, I was the guy who was kind of studying the colleges, trying to understand what it takes. And when I was in college, trying to understand the jobs and trying to figure that out. When I was in my first job, trying to figure out what it would take to get into a, quality business school. So I've had that kind of personality for a while. I'll own that.
Once you arrived, what about the experience of being at Morehouse and in the AUC do you remember the most and stays with you as pivotal moments in your life that led to the next phase?
So I tell people, and I say this without hesitation, Morehouse was the defining institution and time period in my life. That is where the trajectory of my life changed. It was at Morehouse where, I learned about the true possibilities of my business career. I got my passport while I was at Morehouse. My parents, every trip we had gone to had been in the Caribbean. Like Black folks from that era, like that was their move, right? We may go to Disney World, but we went abroad, it was gonna be the Caribbean. But I came into Morehouse, I was actually a very strong German speaker. It was through Morehouse that I went to Europe for the first time. It was while I was at Morehouse, I went to New York to do interviews for the first time. It just brought me into my manhood. But I would say far and away, the most important thing that happened at Morehouse was my oldest son was born. I was a 20-year-old junior and trying to navigate a life that, as we talked about, I've kind of been a grinder and a planner. And having that happen at 20 years old forced me to just bring a different level of seriousness. And some of this I'm even saying in hindsight. In the moment, it was kind of such a blur, but it was one of these things where I had such a traditional college career, and then this big loop gets thrown in. And so I felt like I've navigated it the best that I can, and he's doing okay today. But at that time, it was definitely a big loop. But Morehouse, when I think about all of the most important things in my life, so many of them came through that time period.
So let's double down on that moment in your
Yeah.
life because I'm a father of three, as you
Yeah.
are a father of three, and I waited very late in life to have kids. So I had the benefit of much more years of experience
Right.
and learning. And at 20, I can't imagine the pressure that was put on you, number one. But I do get what you said, that shift in seriousness, because the day my wife told me that she was pregnant with our first, my entire demeanor and approach to things took on a different sense of urgency. Tell me more about, how you navigated that. Being a junior, you still had a year to go. You've got some high ambitions for, going to Wall Street and what have you in grad school. What do you remember the most? What sacrifices did you have to make? What village stepped in to support you? Tell me a little bit more about that experience.
Sure. I mean, it's funny that you say that, Troy, because in hindsight, I probably should have been even more nervous. I maybe had some of the naivete and the kind of inexperience of youth. But, during that moment, my parents really came in to support me. Drake's mom is a wonderful woman. She has done a just terrific job with Drake. And I'm give her flowers at every opportunity to say, obviously, I was 20 years old. We weren't married at the time. And so she stepped in and has taken the kind of brunt of the child raising at the youngest ages. I'm proud of my relationship. I'm deeply proud of Drake, but she really led a lot of the charge there. We've always, had a good relationship, which is nice, right? We never had big fights. And it was just like, it became, to your point, you used the word village. It was like a group project. It was my parents chipping in. It was her mom. She actually moved into a house literally next door to her mom, right? So to be able to help, to just be able to kind of navigate everything that was going on. You mentioned the point about seriousness, even right after Morehouse. I mean, being able to kind of figure out a budget it's hard enough when you're 22 and it's your first job and you're figuring stuff out. It's hard enough to figure that out. Doing that with the responsibility of, needing to provide and provide consistency just changed sort of how I approached my career and approached life. And, again, didn't make it perfect, but it did give me a different backdrop.
Kids will definitely put a fire underneath you
Yeah.
that you didn't have before.
Yeah.
What was your major at Morehouse?
So I was both finance and German. I did them both.
So you don't normally see that combination. And in hindsight, I wish someone would have leaned into me and said, listen, capital is the name of the game when you're trying to get businesses off the ground, and capital, you need to understand finance. Did anybody, put a bug in your ear on that, or were you always just interested in finance?
So it was almost, I was interested in business success. But to your point, I definitely feel like both finance and accounting give you the ability to speak a language, right? It's no different than having a German or finance or electrical engineering. It gives you a very concrete set of skills that you can take away for life, right? Like, I enjoy having that foundation because when somebody starts talking really quickly and using a bunch of acronyms, I can say, stop. Let's just do the accounting. Give me the debits and credits so I can see where the money flows. And you just get a different level of respect, especially as a Black man, when you're just like, stop. I'd rather just talk through the numbers, because I think so many times people assume that we can talk. They assume we can sell or give ideas. But sometimes being able to show, like, no, I'm happy to just get to the math, gets you a different level of respect, at least in my experience.
I love that finance and accounting are as if they're a foreign language that you have to master. I love that analogy. I remember when I learned the weighted average cost of capital, that changed my life in terms of being able to have conversations with people.
Exactly.
So you have some very pivotal moments at Morehouse, the AUC, your first son is born. You come out with your degree in finance and German. What then did you decide to do in terms of career and grad school and what have you?
So I went to Wall Street to do one of those kind of traditional investment banking analyst programs. And, it's kind of like pledging, right? It's one of these where it went exactly as advertised, right? That the culture there is, learn by doing, hands-on, just a very kind of old school, whether it's medical residency or your first couple years as a lawyer or being a junior analyst. The idea is you just learn through reps, and that your time is one of the main things you have to give because you don't have the experience. And so the late hours and kind of working through sort of the models and presentations and really kind of learning the standard at which business gets done, right? In hindsight, the modeling and all that comes and goes. I mean, it's an important skill set, but it's not a determining skill set. But really kind of that attention to detail, understanding the intensity that people really bring to their careers. That's what I really got out of that time period. But yeah, spent a couple years at Credit Suisse doing investment banking. That's where I started, and went to work in private equity after that. And Credit Suisse actually paid for me to go back to business school. And so, I thought I was going to be there forever, but really had that kind of banking and private equity, which is, like I said, Morehouse prepared me for that. Morehouse kind of was the feeder school. And so very grateful for that experience.
Do you know Leonard McReynolds?
Not off the top of my head, but small world, so I might know.
Lenny Mack, he's from Detroit, but I met him after I graduated from Morehouse, and before I went, I did an internship at Amex. But I met him in between when I was trying to my first serious hand in entrepreneurship, and he had just come back from doing some time at Merrill Lynch and was showing me his modeling in Excel.
Yeah.
And I'm looking at these 30, tabbed out Excel spreadsheets.
Right.
And, it took me a little bit of time to master it. But it is, like you said, something that you have to get through repetition, where now it's just kind of second nature to me when I'm, forecasting for opportunities and whatnot. So that is a good foundation for you to move into bigger and better things, especially in the world of finance.
Look, I totally agree that I now, probably similar to you, learn to think in the context of the model, right? That when somebody's telling me about a business opportunity or any situation, to be able to think and okay, that's great, but what does that mean in the context of a full financial forecast, right? And kind of taking that idea or that concept and thinking through it, and you've just done enough to understand it. One of the things that you mentioned earlier that I totally agree with is understanding cash flow and how important that is. And I feel like a lot of times in business education and B school and undergrad, people really kind of talk through, they'll talk through the P&L or they may talk about that balance sheet. But truly understanding how important cash flow is the lifeblood for any entrepreneur. You can grow yourself broke, you can go too slow and end up broke, but understanding that modeling really helped me understand working capital, really understand that piece. It's understanding how the statements work together. That's where there was just some differentiation.
And so Credit Suisse pays for you to go to Harvard to get your MBA, which is also a pipeline for Morehouse men.
Yep. I have 4 Morehouse men in my class at HBS.
That is definitely something I see often on a Morehouse man's resume in terms of where they're going to grad school, especially for business. What is your thoughts on, obviously from a financial perspective, it's great when a company pays for your going to grad school. What are the ups and downsides of that?
Sure. Look, I think there's trade-offs, right? Everything's a situation of trade-offs. Given the kind of inflation of where graduate school prices are right now, that if someone decides to take 2 years off from work to go get an MBA, having your company pay for it, I'd say, look, obviously the positives, it's not having that burden there, I think can free you up in meaningful ways, not just during school, but afterwards, right? That just given what it costs to get private education these days, especially we're coming out of, an MBA program. I mean, you went to one as well. Those are often family formation years. Like those are not just random years. And so that $1,100, $1,200 a month payment, there's so many good uses of that capital that if you can have somebody kind of remove the need to have that kind of loan, that's very helpful. As far as the cons, I'd say there's kind of 2 main things. So one, I view this as, like I said, they're not random years. When you're, in a quality MBA program and you're a young person, everyone in the world will take that breakfast meeting. They'll take that quick phone call to let me pick your brain, that the whole world is open to you. And so over the long term, there may be some costs to not being able to pursue the amazing opportunities you can identify in that program because someone has said, hey, in exchange for these 2 years, you're going to give me another 2, 3, 4, 5, or whatever it would be to satisfy that. And so there's trade-offs, but I've had a number of my friends and peers who've had similar arrangements, and I've seen them generally go well.
And what do you tell your kids today? I know Mark Cuban, and I've spent a lot of years in the education workspace, and I'm starting to have conversations with my daughter, and then we'll have them with my sons about what the potential ROI of college is in these coming years, right? They're going to be 10 more years before they're in college, and who knows where the price tag is going to be. And obviously, if they want to be a doctor or an engineer or something to that degree, they're going to have to go and get post-secondary education. But as a business person myself, I'm starting to question the ROI of coming out with several $100,000 in debt. Right.
We're in very deep agreement that, and let me not speak for you, but I'll speak for myself. Mm-hmm. I think many families, and especially us as Black families, should be very thoughtful about the investment, right? And so in terms of the ROI, I think a lot about, so many people start, the 529 programs, right? They start saving for their kids when they're 5 years old. Given the cost of private education these days, there would be something to be said about that same amount of savings from 5 to 18 or 5 to 22. Let that money grow when they're 30. Literally that amount of capital compared to the degree. And, I love Morehouse. I said it was the defining institution of my life. But for a family where there are resource constraints, where it's not just easy to write the check, there's something to be said about that capital. And to your point about if you're going into business, you're not going to go be an engineer or a doctor or something that requires that certification. I'd be lying if I didn't say some of the tactical information. I'd almost rather a salesperson spend 20 hours a week on YouTube than trying to go through kind of a university level professor led, sales program. So I understand the trade-offs. I would say for the families that do have the resources, I think there is a unique life experience. I think there's a unique cultural experience that especially the HBCU carries in our community. And so that ROI, if you expand it from a life perspective, I think that the ROI is still significantly positive. But the financial piece is one that folks really need to think about, and I understand the trade-offs.
Yeah, I concur because, like you, Morehouse was a pivotal moment in my life. And I do want my children to have those formative years, especially in a nurturing environment like a HBCU. But at the same time, in hindsight, I'm like, I also would have liked to have gotten a couple year head start
Yep.
on the hands-on experience and not come out with the debt that I did. And we're talking about drastically different dollars now
Right.
than when you and I were in school.
At some point, the math does probably tip the other way.
Mhm.
I don't even know what it adjusted for inflation, but for, my 6-year-olds, like what undergrad will be. And you start saying, like, I get inflation, but you start looking at this and $500,000 and $600,000. You start saying, hey, like at what point, is it worth it? Right. And so it's a unique situation. Yeah.
So going back to your time at corporate America and then grad
Yeah.
school and then back to corporate America,
Yeah.
did you face any challenges that you would attribute to being a black man in the space, either by way of overt situations or circumstances, or your background that put you in a unique situation or circumstance? Anything that sticks out in your
I
mind?
mean, it's a great question because the answer is yes, yes, and yes. And so, and first of all, I want to say, I had a good situation where I grew as a professional and I was generally supported. But to your point, there are situations that I can think of that, I had a mentor, a gentleman named Ray McGuire, right? One of the kind of legends and OGs of Wall Street generally, and one of the leaders certainly in Black Wall Street. And he was a managing director when I was like a sophomore doing one of my internships. And he said, let me tell you about being black on Wall Street. You've got a spotlight on you. So let me tell you about how that spotlight works. He said, hey, if you're a star with the spotlight, you're the brightest star and everybody knows you. And it's going to be awesome. He said, if you're not doing well, if you're struggling with the spotlight and you won't last long. And he said, the thing that's really tough about this is that if you're average, you're going to be average with the spotlight, you don't slip through the cracks. You don't get the benefit of the doubt. You're publicly average. And I would say that has been very consistent with my experience. And there were just a number of times where there were the kind of small, for lack of a better word, microaggressions, where a senior person didn't necessarily always see me, or see themselves in me. And I would hear about how folks had gotten together on the weekend or gone water skiing or had just had interactions where I wasn't invited. And I don't think there was ill will, but I noticed that. And then, frankly, there have been other interactions that were a lot less positive, that were more overt, where jokes got made that were in super poor taste. And just having had those experiences, and frankly, having not had to deal with it in Morehouse, right? And I went to an integrated high school, but I grew up in the same environment. So we all kind of knew each other. There wasn't a lot of room for that. And so some of the first times I felt some of that actual kind of overt discrimination, jokes that were just in poor taste, it was in those environments. And so it's also what began to kind of water those seeds of entrepreneurship that had been planted earlier, me realizing for me, navigating these environments as a career was just not something that I was going to be as interested in. And again, we were just kind of watering those seeds at that point, but I will be honest and say that I did face some of that real discrimination, and that bluntly, Troy, I think the folks before me in my generation and to this day, I think are still facing some of that, whether it is overt, whether it's covert, whether it is labeled as race or class. I think there's just a certain culture where we are welcomed initially as, hires, and people can kind of check their box, but truly being a part of the culture, it's difficult.
After the break, Bryan will have to make a decision. Should he try to continue to navigate the choppy waters of Wall Street or start out on his own? I'm Troy Evans, and you're listening to Give 'Em the Business. Give 'Em the Business is sponsored by Oasis Vacations. Are you tired of vacation rentals that don't live up to the photos? We get it. That's why Vacation with Oasis is changing the game, offering luxury vacation homes in the world's most stunning destinations. No more surprises, no more letdowns. Just high-end, beautifully curated stays designed for comfort and unforgettable experiences. Whether it's Dubai, Costa Rica, Hawaii, or beyond, Oasis delivers next-level hospitality, premium amenities, and a seamless booking experience. Visit vacationwithoasis.com and upgrade your next getaway. We're talking with Bryan Rand, founder of Rand & Co. Holdings. Bryan was on the fast track in high finance, but the 2008 market crash was looming, and Bryan would soon be forced to make a decision.
I'd been at Credit Suisse. They paid for me to go to business school. I'd come back. And frankly, I thought I was going the long-term New York high finance managing director for life route. And what actually ended up happening was global financial crisis hit. And I was working for Credit Suisse in their internal private equity group. Their whole world had been blown up with all of the, displacement. And it became pretty clear they were actually going to either sell the group, shut it down, change it significantly. And so there was a brother who worked at Credit Suisse in another fund. And so I'd known him through work where his group did distressed investing and did a lot of kind of exotic loans and the like. And we'd met through work where there would be times where my group would look at taking the equity capital and he'd look at taking the debt, right? And so we'd bumped into each other and we built a good relationship. And his name's Damian Dwin. I think the world of him. He has, set the world on fire, his success. But at that time, we were both at Credit Suisse, and he said, hey, I think they're going to shut my group down too or do something to it. I want to make a bid to buy it from the bank. At this point, I'm a couple years out of business school, and he's a little more senior in his career, and said, I think that there's a special opportunity here. And so, very long story short, in the spring of 2009, we were actually able to buy the book from the bank. The bank provided seller financing. We were able to buy this portfolio of exotic and structured loans on really good terms. And having had that experience, partnering with him to do that, where he kind of looked out, was my first brush with entrepreneurship. And fortunate to say, a year and a day after that deal got done, was able to sell that portfolio for a significant number to really have a lot of success.
So I want to dive into that a little bit because that's an amazing story in and of itself.
Yeah.
One, because I remember 08, 09, there was terror in the streets, during that time. And especially if in your space, Lehman Brothers going down and other banks and people not knowing, what's going to happen. But they say in those times of chaos is when the opportunity exists.
What you said, I hear people say that all the time, what you identified, truly resonating with it. Like the opportunity is in the crisis time and what that means. Because to your point, you have a world melting down, right? Where all of the things that people assumed were true, they're finding out are not true. And so you've got employees at Credit Suisse, they just want to keep their job. They're trying to get their ratios in line. So they're trying to figure out, do they want to do this deal? Are we missing things? You could imagine finding the money to do the deal. Literally, I remember working with Damien. And again, I want to give Damien his credit. Remember, I was a junior guy at this point. He led this, but a great brother. We looked everywhere. We actually ended up finding a family office in China, in mainland China, that saw the potential here, that took the risk and actually wrote the majority of the actual equity check. And then again, the bank seller financed the rest. But getting a multi-million-dollar check to buy these risky assets at that time, it's easy to say the opportunities in the crisis when things are calm. But like I have learned, and really kind of starting with that experience, that it's supposed to feel hard. It's supposed to feel uncertain. That's the actual business that we're in. And so, yeah, no, absolutely. Like that was require creativity and guts. And it was good for me to kind of learn from as a junior person to see that. And so that deal occurred. But, post deal, Damien went on to kind of raise like a big fund. He wanted that life. And I have never been that interested in going the fund route after kind of my initial training. And so from that point, and I said, hey, we've had a lot of success here, but we went our separate roads. And I was actually doing some kind of independent advising and investing based on the success of this first path. I knew what was possible. And at which point, it wasn't really framed up yet, but I was able to move to sort of the next phase of my career where I actually, in that process of kind of doing some investing, advising, and figuring out what's next, I knew I didn't want to be an associate at ABC Capital at some other fund. I actually took an investment in a company called Vacation Innovations, which I got to, knocking wood, really see just a true rocket ship. When I invested in the company, I really reached out to them to figure out how we could work together, ended up taking a small investment and really partnered there and saw kind of began the next phase of my career.
It's clear to me is that success on your first deal per se allows you then to go have some cash to positively go into this opportunity with Vacation Innovations, right?
No, that's totally right. Where not just the cash, but again, like we were talking about with my parents, it's knowing that things are possible, knowing that it's there, that someone else doesn't have to, that you can sign the front of checks and have success, not just the back, right? And so that was really the bridge there in my career. And again, I don't want to downplay it. There was a lot of risk. There was a lot of uncertainty. I was doing some struggling within myself because I'd always seen myself. And frankly, I think my peers saw me. And again, in hindsight, who knows how much people cared. But at the time, it was like I was going to go be a big firm Wall Street guy, that I was going to go have Ray McGuire's path. But it was just during that I understood that that wasn't meant to be for me, that I could have a wonderful and amazing, successful career, but that I learned at that period more where I was headed. So that's where I was. And so they kind of brought me to where I'd kind of invested in Vacation Innovations, where, I'm still deeply involved today, but having seen that company grow, having kind of navigated so much, that really kind of put me on a platform for the rest of my life. And so to kind of bridge you kind of closer to Rand & Co., VI, my small investment there has grown substantially. So that was 2011, 2012 when I first became connected. That business grew. In 2017, we actually sold a third to private equity. I hit it off with the members of that private equity fund. I actually was participating and was active there for a long time. But the capital from these events gave me the wherewithal to do my first couple deals that actually started Rand & Co.
So you grow with the company and are able to take advantage of a significant event in terms of private equity coming in and giving you some additional capital to then go to start a launch.
And that's really, at that point, Tiff and I had been married sort of a year or two. And so it was really kind of set the stage for really where I am now and where I'm heading, where I knew that I didn't want to go out and raise a big fund. And Troy, I'm always careful with my words here. I want to do more than just sell money. The guys with the big funds, and trust me, we need brothers doing it. We need brothers in venture capital. We need brothers in private equity. We need brothers leading all the big banks. But at the end of the day, the capital provider role, at the end of the day, you're just selling money. And it can be a great way to make a living. You can build an institution that does that well. But I looked up to Reginald Lewis. I look up to Bush Graves. I looked up to so many folks who truly built and owned great businesses that were long-term stakeholders in communities. And so for me, I knew personally that kind of raising a fund and trying to go that route, in addition to being super difficult, it wasn't what I wanted. That I want to be able to be the one who says yes. I want to be able to be the one who has the impact in the community. From my perspective, private business owners have unique and special impact on communities. That private business ownership, you get an outsized vote, right? That I look at it as elected officials, they come and go. Public CEOs, they're like NFL coaches. They actually don't always last that long. But when you see folks with large scale private businesses and the impact they have on their community, the boards that they get on, the folks that they hire, the lawyers they pick, the insurance brokers they pick, the real estate brokers they pick, you have long-term impact on communities in a way that is meaningful to me. And so I knew that I wanted to go and truly use my skill set for being able to kind of acquire and grow businesses, but do it as an actual owner. And so like I literally partnered with one of my good friends from Morehouse, Harold Martin. We did small deals together and really started building some momentum. So we did our first deal, Highland Cigar, in 2014. And then it began building from there. Got to a point where it made sense to just hire someone to help out. At that time, I was wearing a bunch of different hats, both helping out at Vacation Innovations. I was working with the private equity fund that took took the minority stake. But so it just made sense to hire somebody to help out as we were doing additional deals. And that just started rolling and rolling and rolling. And so from my perspective, the pivotal moment was saying, hey, let me have some private investment exposure. And then it really grew to the business that it is today. So, I mean, again, happy to walk you through more of it, but it was really making that kind of bet on ourselves to do some private deals and use our own money and do it as principals.
Well, one, I love betting on yourself. Two, I love your approach and how you described in your mind the differences between providing capital and selling money through a fund structure, which I'm familiar with, and it is definitely a grind. But for what I heard you say and the approach you wanted to take, you wanted to invest in people and communities that were going to have a long-term lasting impact. And I'm a huge believer in that because it's voting with your dollar, right?
Mm-hmm.
The vendors you choose to engage with are going to support communities and the next generation of kids who want to go to college and start new businesses. And because you're hands-on, you're able to lend your expertise to avoid some of the pitfalls that entrepreneurs may face without that guidance and what have you. So I really love the approach that you've taken with Rand and Company. So you started with Highland Cigar, and you've got how many companies in the portfolio now?
So right now there are 8 platforms across the country, a number of different industries, where we really kind of have 2 types of investing we do. So we have what we call a legacy buyout, where we will buy a business that has generally been around at least 30 to 40 years, where there's generally generational change, right, succession issue, where we like to see that the business matters, right? So it's either longevity, it's important, it's community, it's margin, but where we can kind of go in, identify a top quality manager and negotiate terms that make sense and really kind of own and be a steward of that business. And the idea is not to flip it, but to kind of go in and find that business and be able to really kind of find whatever that business is and kind of own it, right? And my view is I don't mind writing a check. The idea is we want our money to make babies. We're going to write a check and then we're going to get a little check back forever. That's the goal on the legacy buyout side. On the growth partnership side is the second type of business we do, where we will actually partner with someone who has run a division, who has been a sales leader, but someone who deeply knows the space, and we will either start from zero or buy something small in partnership with that person. And those have actually ended up being some of our biggest and most successful deals, where we've actually started things from zero and really built, market leaders together with the idea that if you bring true expertise, deep knowledge of the capital markets, and you can kind of go provide a differentiated service, that we have seen that work over and over because so many folks can't combine those three.
And so your platform's 9 platforms, 400 million plus in revenue a year, which is outstanding. Is there a particular baby that you're super excited about right now?
It depends. It's probably like kids. It depends on the day.
Right.
It depends on the time,
the Deion
right?
Sanders approach,
Our model.
right?
I mean, but I'm happy to kind of walk you through one or two of the examples that I think we're especially proud of.
Sure. Give me one.
So one of the growth partnerships that I mentioned, where we started from zero, is a company called Campana Oil, where a gentleman who I'd looked at doing business with out in the energy space, he and I kept in touch over the years, but we're never able to find a deal. He gave me a call and said, "Hey, one of my mentees really just got, a raw deal. Private equity had actually come in. He was the number one fuel broker for a platform in Texas. And private equity came in and bought the company. And 2 days after they bought him, they cut his commission by 50%. They changed his region in a way that would cut his commission. And he just said, this isn't right. I have a contract. I have a family to support." He's a relatively young guy, but he's making a lot of money. They, for lack of a better word, said, "Sorry, decision's final." So his mentor, who I'd been friends with, connected him with me. And he said, "You should talk to my guy, Bryan. He knows this fancy stuff." He said, "I don't know if he's," but he just said, "You should talk to Bryan." And I met with this gentleman's name is Patrick. And I really liked him. He was sharp. I could tell his integrity. And so I actually had my lawyers look at his contract. I had Wilkie Farr up in New York look at his contract. They both said, "Hey, his non-compete is poorly written for Texas. He can leave. He can do his own thing." And so we met up in Dallas. He brought his wife. We did a great meeting. And I said, "Hey, we're going to figure something out." And we actually created a partnership where I put up the capital using my balance sheet, and he jumped in. And this was spring of 2022, and created the company to say, "Hey, we're going to do fuel brokerage." So what we do is literally get diesel from Corpus Christi down at the refineries and actually haul it out to the fracs in Southeast Texas, because where you drill for oil out there, there's no roads. There's not a lot of infrastructure there. So you literally have to bring the diesel to run the trucks so they can drill. And we literally started that company from zero. But what we saw was a really unique opportunity that really kind of works on our Rand and Co. thesis of fuel distribution is very capital intensive. There's a bunch of large private companies, mega private companies, and large public companies that do it. And so for us, we said, if you can build somebody who has the financial wherewithal to service these customers, right? You got to buy fuel every day and you pay the next day. Your energy customers that are actually doing the drilling, they pay every 10 to 30 days. So you got to have a pretty sophisticated knowledge of how to manage the money. But if you can do that and you can provide high touch and high service where you can answer the phone, where you can say yes, you can outcompete some of these larger folks. And Patrick's thesis was, hey, I'm going to be the guy who picks up the phone. When there's an emergency, I'm the guy to call. These big companies, the decision making gets jammed into corporate. They want to be careful because there's so many dollars at play that they push the decision making to HQ. Versus if you have somebody who has the financial sophistication, they can meet your needs, they can manage. At that time, we were buying $100,000 of fuel a day. To fast forward today, we're buying $1 million of fuel a day. And so if you have the ability to manage that, but then also answer the phone, you just create this preferred vendor. And so we've built kind of a speedboat to go compete against these super tankers. And so, I'm very proud to say that almost less than 3 years later, last month, we did more than $10 million of revenue, that we did it on very attractive margins, that we own the business without debt. It's a situation where I was able to put up the capital. Patrick came to run the business with the majority share, brought his expertise, brought his relationships, but we kind of took that risk together and we have grown that business through time. Now, it certainly hasn't been a straight line. There have been times where we grew too quickly for our banks and I had to put my own money in for weeks at a time, right? That there were times where we've had incidents. It's a tough business. But I think it's a great example of how we can kind of partner to build meaningful businesses without taking outside institutional equity. Now, we've taken institutional debt, but we've really gotten to a point where the principles of this business truly own the business. And so I'm super proud of Patrick. I mean, what he's built is amazing. And frankly, I think we're just getting started. But it's a good example of the kind of business that we can do and that we do on the growth partnership side.
Very impressive. Where do you see Rand and Co. being in the next 5 years? Number of companies that you've invested in, dollar amount that you want to be hitting in terms of revenue, et cetera?
So right now, the way I would love to do this is I want to build our machine to where if you kind of ask me what I'd love to be doing in 5 years, I'd love to be doing a deal a month. I don't have a lot of desire to kind of increase the size of the deals we're doing. I love being able to do kind of modestly sized deals that I just think are totally unfair fights, where their just returns are through the roof, where, there's nothing I like better than partnering with an experienced operator who knows what they're doing, but giving them kind of additional ownership, allowing us to provide capital and services and being successful. And then I see that person and their family's life change, that they go from being kind of successful exec to like a meaningful owner where there's real wealth creation. And I love that. And so I want to really build this machine where we're now seeing these unique situations, where one of the reasons I love to have these conversations is I want people to kind of understand, I want to see the unique and funky things, or that when people have entrepreneurs and partners say, hey, I've been working on a deal and we've been working on it 1.5 years and we're stuck. I love to jump into those situations. And so we're really kind of building this where I'm hopeful that within 5 years, we'll be doing north of $1 billion of revenue, that I'd like to have a much larger portfolio, that I'm constantly kind of adding to my team and staff, because my goal is not to grow to the point where I go and the private markets, as you know, once you get upscale, everybody gets into big institutional auctions. And, that's one way to do business and the one way to do a lot of money. And I've got a lot of respect for those guys. Right? The guys who buy football teams are often doing it that way. But I feel like the impact I want to have and the way I like to do this and the way I keep my governance is really building that machine where we're doing what we're doing now, but we're doing more of it. We're doing it better, and we're providing kind of a better level of partnership. I think it just creates a virtuous circle that I'm excited about.
I love that. And I have no doubt you are going to hit that goal. Two things I want to touch on. The first is family life. I know you've got
Yep.
little kids as well as the older one. What impact has entrepreneurship had on your family life? in terms of challenges and also benefits. And we can start with that, and then we'll go into your final words.
Great. So with regards to family life, as you know, entrepreneurship, again, is a series of trade-offs, right? That in some ways I have flexibility, right? That if we need to go on a trip, if we need to do things, that I generally have more control in theory, in that I'm the person who determines my schedule. That said, the other side of entrepreneurship, we're never off. We never have a clear mind to just go stare at the sky, that there's always kind of more work that could be done. But one of the ways we navigate it, with my young kids, we make a huge deal out of Sunday. Sunday is daddy day because I travel a lot for work. I'm tied up for work, but generally Sundays, I'm here in Atlanta. And so my wife and I, we can take our kids to church. We can have a good brunch together, and then I can do some activity. So it doesn't have to be big, but we kind of make it like, this is daddy day. They look forward to it. I look forward to it. And it's just a way of kind of navigating a non-standard situation. I grew up where the three of us sat down, my mother, my father, and myself, for dinner at 5:30 p.m. every day. Unfortunately, our life doesn't work that way. But I've been able to kind of create and navigate a series of trade-offs with the young kids that make sense. And then even with Drake, we kind of go out of our way to make time. And more than once, Drake is a junior consultant at Deloitte. I've run into him at the Atlanta airport without planning, not knowing he's there. And he says, "Hey, Dad, I'm just getting in." I've seen him at 10 o'clock at night. I've seen him at 7 o'clock in the morning. And so we're making it work as a family. But, it's all good so far. And I'd be remiss if I didn't say my wife is the one who keeps the clocks running, keeps this family running despite everything moving around. So she's an entrepreneur herself, has built a heck of a business with Polished Dental Centers, and also managing our family.
So we always ask our guests to give the podcast listeners the business and any parting words of advice to the next generation of entrepreneurs, what you would want them to know from your experiences so they can have a smoother ride to success.
Sure. So I will share my experience and say it's supposed to be hard. That if you're going to do something that matters, that it's not going to be a smooth ride. That like settling in to understand that if you get your wildest dreams of business success, that the path there is going to be tough. That there's going to be thousands of no's, that you're going to get sued every other week, that your best and closest employees and mentees are going to quit on you, that you're going to have the biggest business meeting of your career, and that morning your childcare is not going to show up. That is the business we're in, that this is a business and life of constant crisis, interrupted by brief periods of success. And that's okay, that that's what this is, and that in the end, it's worth it.
That's Bryan Rand, founder of Rand & Co. Holdings. If you want to learn more about Black entrepreneurs and business leaders who have made an impact, make sure to subscribe to this podcast and follow us on our YouTube channel at Give 'Em the Business. Also, make sure to follow us on social media at Give 'Em the Business Podcast. And if you want to send me a message, you can find me at I am Troy D. Evans. Give 'Em the Business is produced by Two Common Media. Thanks for listening, and remember to Troy harder.